what is the basic difference between preferred stock and common stock in a corporation? So in the startup context, in the angel and venture capital world, preferred stock is usually what's sold to investors. And preferred stock is called preferred stock because it has certain rights. Common stock, on the other hand, is usually what the corporation issues to founders when they have founded a company. And common stock is sort of the base level of stock. It represents the rights to vote on corporate matters. It represents the rights to get distributions. Preferred stock gives usually the angel or venture capital investor what's called a liquidation preference, first and foremost. And that is an economic right that basically entitles the investor to get a return of money or a distribution of money before any of the founders or other holders of the common stock get any economic return. So the idea is that they put in money to the company, they receive preferred stock in exchange. If the company is sold or does an IPO, then the money first goes back to pay back the investors. Now there's all kinds of variations from there, but at a very basic concept, the idea is that preferred stock gets paid out first. In addition, preferred stock will have certain kinds of rights. So most of the time, founders own way more numbers of shares of common stock than preferred stock investors will ever own. You might see the most of a company ever owned by any VC in any particular round is like 20 or 30%, and the founders or common stockholders might own 80 or 70%. So how does that investor get any rights in a corporation? Well, the preferred stock generally also carries with it certain kinds of voting rights and other contractual rights, which we cover in much more detail. But for purposes of this basic level understanding of what preferred and common, you can think of preferred stock as a kind of stock that carries with it special economic rights, that is to get paid back first, and special voting rights, things like electing certain directors and having to approve certain key things like debt or new financings or an exit or any kind of material transactions. So in a nutshell, at its highest, most basic level, and this is a gross oversimplification, that's the difference between preferred and common stock.